Okay guys, Sunday the 12th of November and we are on the FTSE 100. So let's have a quick recap of this market from last week in relation to our Sunday analysis, and then we'll have a look at the market for the trading week ahead. And what I'm going to do is I'm basically going to talk you through how we looked at the market going through last week. So how I went through it with subscribers and how I started to analyze the market and what I was looking for as each day happened. Now, Monday and Tuesday last week. Now we had some nice moves on this market. So we had quite a few levels on the FTSE. We had one up here, a key one. I'm just going to put in some of the key ones that we went over last week. We had one down here. We had one down here. Now coming into the start of the week, we were looking up toward previous resistance, up toward the all-time highs at around about 7,590 up into 7,600. And what we've seen is on Monday, the market pressing down and then spiking back up into these levels. On Tuesday, we spiked up and had a really strong rejection. Now, for me, I didn't have any trades on Monday or Tuesday. Now, with the previous week, the Friday was non-farm payroll. So I didn't trade on non-farm payroll, then had Saturday and Sunday off, didn't have any trades Monday, didn't have any trades Tuesday. So that's 5 days with absolutely no trades. And what can happen a lot of the time is, especially if you're a beginner, but not only if you're a beginner, it can happen to almost any trader, is when you're not trading, when nothing is happening for days and days and days, you start to go looking for the trades. So instead of waiting for that perfect setup and waiting for things that line up exactly with your trading plan, you start maybe cutting some corners and you say, well, this isn't quite perfect, but it's an almost, and I think it's going to do this. And that's, that's when things really start to go wrong. And that's when you start to do damage to your account. And then you damage your account. And what happens is eventually you realize you're damaging your account, you snap out of it and you say, okay, I need to get back on track. I need to get back to my discipline. And then you start, really struggling to get your account back to where it was. You get it back to where it was, you have another period of inactivity, and you do the exact same thing again. And that's, it's one of the main things that hold people back when they're learning to trade, is they do really good periods of trading, and then they have a bad period. And the problem with trading is it's pretty much true with anything in life. When you go through the bad period, you can do a lot more damage a lot more quickly than the benefits that you've gained when you've been going through that discipline period. So the discipline period, it's all about building slowly. It's all about maintaining your focus. But then if you switch off and if you start making those mistakes, you can do a huge amount of damage to your account. Not only your account, but your emotional state when it comes to trading as well. So Monday and Tuesday, there were absolutely no trades. A little bit of frustration. But then what happens is, we got to Wednesday, Thursday, and Friday, and we had great setups. Really easy setups, really obvious setups. Now I only look to take really one good trade per day, but on the Wednesday, Thursday, and Friday, there were more than one trade setting up in the day. So, it's worthwhile waiting for those days. It's worthwhile not rushing into trades and just sitting on your hand and just waiting, knowing that eventually those perfect setups are going to come. On Wednesday, Thursday, and Friday, every day I was finished work before 9 a.m. So you have the frustrating periods, and then everything starts to line up, and that's when you start to make your money as a trader. Now, what I did was, after Tuesday, I had another little look at this sloping support line that we had, and with subscribers, I just adjusted it ever so slightly to round about here. Now the reason for that is I started to look down here and I started to look at the touches, the tails, 1, 2, 3. This pause here, we paused at almost exactly the same levels, and then we basically touched on a sloping support line, and then we had the strong bullish movement. We came back down, still tested here, but then what I started to look at here was the potential that these candles, especially this one on the 1st of November, was pressing up and then rejecting back down below something. And it made sense to start looking at this sloping support and resistance line for that. We then tested it on the Monday the 6th, which gave me a little bit more confirmation. And then what happened was, after Tuesday, basically started to look at this market a little bit differently. And then let's mark this in. Thursday and Friday, we started going over a key level on the FTSE. I believe it was around about 7,475 5, maybe a little bit higher. One of the subscribers, you can correct me if I'm doing this incorrectly. I'm trying to do this all from memory. I don't have the daily subscriber pages loaded up. And basically, if we started to break down below there, we were looking for the move down into at least 7,450. And that's what we got coming into the second half of the week. And it ended up being a really good trading week. And it's all about, you do your analysis. I always do my analysis at the weekend. And then when it comes into the trading week itself, I'm also then looking at the market every day, because the market can give you little clues every day depending on what happens with price action. So this one here on the Monday gave me that clue that potentially it's bouncing off of something. Now it's testing the previous spike here on the 1st of November. But then I started to look at potentially this sloping support line just being a little bit higher, as well as this one that we had sitting right here. Doesn't make too much of a difference, because you can see if you're looking at both of the sloping support lines, we started to break below it on Thursday anyway. We could still continue to look for that rejection. It's giving us the weakness sign, and we still would be looking for that move down to 7,450. However, it's worthwhile having that attitude to the market. You just don't just want to come into the week and just have, I'm looking for X, and then you just put your blinders on, and Monday, Tuesday, Wednesday, Thursday, Friday you look for the exact same thing. If the market starts to give you those clues that potentially you're incorrect, you want to be able to change what it is you're looking at. The 7,450 target, basically we took it off of this spike up right here, but the key levels started down into 7,430. Okay, so let's get rid of these lines and let's look for the trading week ahead. Okay, so now after this bearish movement, we're looking at potential areas of resistance on pullbacks. We've had a relatively strong movement last week. The FTSE came off, if we take it from its high point all the way down, we've came off around about 170 points, around about 2.2% on the FTSE. So first thing is, this level down here remains a good level of support. One and two. So what we're using is this previous swing point from back in August. A very, very strong level of support and resistance. Good area to look for potential bullish positions coming into next week. Now, if we do break down below this level, it's also a good area of, or it would become a good area of resistance to watch. However, we'd be a little bit careful with the MA200 on the daily time frame sitting right here. Looking for potential support down there. Around about 7,400, so around about the round number 7,400 down to 7,395. Again, still using this previous level of price action to get our clues. What I'm really using is this Thursday, the 14th of September, where we spiked up and then we had this huge bearish movement from that level. Just want to incorporate into that the MA200. I'd be happy to look for the potential move down into those levels. If we break down below this area, this would become potential support. And if we break down below that level, what we begin looking for? Well, we have a level of support at 7,375. Up into around about 7,385. But the next key levels of support, they really start down all the way at around about 7,350. So if we do start to break down below this level right here, it's potentially giving us that signal that the FTSE is looking at a stronger correction. It's potentially telling us that this swing point is starting to fail as support. Look for the move down towards 7,380, with the stronger correction down toward 7,350. Really starting to line up with this pausing price action from back in September. Now, if we start to see the market rally, we're looking up above at resistance areas around about 7,465 to 7,475, 7,480. Again, using that previous swing point. And what you'll notice is this is the area that we identified as we were coming up in October. This little candle here on the 4th of October gave us the clue that this was going to be a support and resistance level. And we're still using it now that we're all the way into November. So pullbacks into this level. Again, worthwhile looking for resistance. Up above there, Let me just have a look here. We've got 1 and 2 right here. Right here. So now that the FTSE has shown this rejection, we're potentially seeing a break below a double top. 3 and 4. This makes it worthwhile looking for the rejection at these levels right here, which would be trying to retest the center of that potential double top. Now, really, when I'm looking at double tops, I prefer that first shoulder, if it's a bearish double top, to be higher. So I prefer it to come up and do something like this, because then what it's showing is that second wave up was weaker. The bulls could not force the market back up into the previous highs. For me, they're a little bit higher probability. However, it's still worthwhile looking at this as the potential double top, looking for that rejection, because what we're doing is other traders are going to be evaluating the market. And although a pullback to retest this level may not see the double top confirmed and a huge move down, it's likely that we'll see bears stepping in at these levels. So it's likely we will see some sort of reaction. And as day traders, we can capitalize on those slightly smaller movements. So although we're looking on the daily time frame, it doesn't mean that we have to have daily time frame reactions to trade, because we're day traders. That's why I like doing my analysis on the higher time frames and then working my way down and trading on the lower time frames. So key resistance, still a good level of resistance up above there, back up towards 7,500. If we're starting to fail at this level, it's giving us that clue that potentially the bearish action is going to continue. This is a key level of support. If we start to break down below here, then really it's giving us a little more confirmation that the bears are still in control. We look for the move down to 7,400. And then if we start to break down below here, you know, longer term, I'd be looking for that move down toward 7,350. Okay guys, so that is everything for this week. As always, I hope you found that useful. I hope you all have a good trading week next week. I'm James Orr, and thank you.